Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in, take a look, see what people are sharing. If you want to follow me at Finance Score Finance, and if you want to join our community, finding-value.com, where I dive deeper into all of these topics, looking for potential investment opportunities. So, Bobby's saying oversold levels. Nasdaq 100 adjusted for the money supply, all the way up there. Tech bubble number one, and do we have tech bubble number two developing here? Yeah, probably. What does this mean? Why do we use this ratio? It's just the Nasdaq 100 against the U.S. money supply. It means a lot of the portion of the money supply, when money's in the money supply, when it goes into the Nasdaq, this is typically where we get a bubble top. That's where we're located at this exact moment. Josh Young says, I'm not sure how that will shake out, but consensus incremental LNG export capacity growth is expected to be 3 to 5 times consensus data center demand growth for natural gas. The big mover here is LNG export capacity. It's not AI demand center growth. It's the LNG export capacity, and look at the ramp we've got coming right in front of us. Some people say that we're closer to a peak in natural gas production than what most people think, and we're going to find out if that is the case, because when this LNG capacity comes online, it's going to say, feed me. We'll see if we got any more production left in this thing. Company says, throughout my career, any industry that China enters, they take margins to zero and steal all the market share. From solar panels to autos, they're unstoppable. Now they've set their sights on semis or semiconductors, which are a pretty crappy business in the best of times. Meanwhile, Wall Street is absolutely convinced that this cycle is somehow secular instead of cyclical. It's a longer cycle versus a shorter cycle. And that China is still behind in the tech. Neither will be true. Semiconductors have the most insane down cycles, and this time won't be different. Additionally, if China can leapfrog in AI, they can do the same in chips. I still remember that first big down day in the 2000 when MU, INTC, Qualcomm, Texas Instruments, I think it's TXN back then, opened down big and then sold off all day. They didn't bounce for months. They just kept selling and selling. Firms collapsed and got swept out to sea because they bought the dip. Semis have the capital intensity of a shale crap company, but with tech obsolescence too. I've been baffled at the valuations for a while now. Is today the start of the unraveling? Question mark. Disclosure, long boatloads of puts and put spreads, even short some common caveat emptor. He's short the semiconductors. That's copy. As the minimums, says Northstar, Nvidia should underperform gold by 66% this year. So we've got some big dogs coming out pretty bearish on Nvidia. So this is Nvidia divided by gold, the ratio. He says every single one of these arrows is the same size. Same size, same size, same size, and whatnot. We get these back tests. So he is projecting, since we've broken the uptrend line to the downside in this ratio, that we are most likely at least going to go down 66% and do a retest of this. But then we'll have to see if it holds. That's kind of Kevin's opinion on Nvidia versus gold and a 66% retracement. Investment wisdom, Charlie Munger says the best thing a human being can do is to help another human being know more. That's the best thing a human being can do. That makes sense. Rock bottom entries, DeepSeek. Oh, there's that. I was trying to remember the name of that. Yeah, DeepSeek has dismantled the hype in tech AI. The era of commodities is here. Buy hard assets. We're looking at a potential double bottom of the commodity index to the S&P 500 ratio. We've got a spinning top reversal there, right at the bottom there. We've got a bullish divergence on the relative strength indicator coming on up. Could this be a double bottom of commodities? Could we start to move higher? I think we could. We get a selling, sell off in Nasdaq and some of these other sectors. We could probably see interest rates fall. And more than likely, what you want to watch the dollar to see if it weakens, and we want to see if commodity currencies start to strengthen. If they do, that I think will be an indicator this double bottom is 100% correct. You'll also start to see precious metals go up. Now, today, which is Monday, we saw strong selling pressure in gold, and I don't know if that's a legit signal, if they hit it hard, they being the Federal Reserve or JP Morgan or whoever. Because usually when you see rates and dollar go down, gold generally goes up. And it went down with the rest of the market. Trump is going full retard. As they say in Tropic Thunder, never go full retard. Well, he says Trump's going full retard. This is U.S. crude oil imports from Colombia, and it's about 208,000 barrels a day. So he's talking about all these big tariffs. Trump says he will impose emergency 25% tariffs on all Colombian goods coming into the United States. We'll raise that to 50% in 1 week. He's just showing that we do have a lot of imports coming from crude oil. I mean, it's not a huge amount, but it is an amount. Oil to Nasdaq composite ratio. I threw this up there. I saw earlier that the Nasdaq was falling, so I was just like, oh, well, what does this ratio look like? We had this falling wedge. It looks like we were coming back up throughout the day. So we've got a breakout, kind of a retest, and we'll see if we can get an outperformance of crude oil versus the Nasdaq or not. This is one to watch because I think we're still in this big bull market for commodities, and oil outperforms the Nasdaq in these bull markets, and I think it's already started at the bottom of 2020. Giovanni says drilling activity in the U.S. Baker Hughes primary vision. We are falling. We are falling big time. This is not drill baby drill. This is everyone's not drilling and they're drilling at faster. This is like the undrilling of everything. This is a free fall in drilling rates. So drill baby drill is definitely not what's occurring here. It is falling. Amy Nixon says, reminder, if the stock market bubble pops, housing is toast. I completely disagree with this statement. I think I think the housing market is going to go up if the stock market bubble pops. Why would that be the case? Well, I think that if the stock market bubble pops, they're going to lower interest rates. They could lower interest rates quite a bit. The lowering of interest rates is going to help the housing market a whole bunch. Affordability is going to come back into more affordable levels depending on how far interest rates fall. And I think that they're going to try to save the stock market by lowering interest rates. So I think that's going to actually help housing. I think she's wrong, 100% wrong on that. I think housing is going to go up. I think that we're in a similar situation to 2000, 2001, where we get like a NASDAQ bubble, it pops, they lower interest rates, and then they blow up the housing market. I think it's the same playbook or something very similar. That's what I think. And I think there's a bunch of buyers that just can't buy because of affordability. But if the affordability gets a lot better, I think we got more buyers out there. Christine Guerrero says, is the Permian Basin creamed with $83 per barrel break even for new wells? This analyst thinks so. Looking up creaming curve if you're unfamiliar. This is evidence the Permian Basin may have peaked. And I'm going to have to go in and watch that. But $83 per barrel break even for new wells. Oh, we're going to be drilling a whole bunch of wells, right? Drill baby drill at 75, 72, $73 barrel oil. It doesn't look like it. It looks like the break evens are going up and up and up. Warren Buffett says one of the things we look for in a business is if you see a business take a lot of adversity and still do well. That tells you something about the underlying strength, says Warren Buffett. And I know he he looked at Coca-Cola. He read all of the previous reports, and he never saw a decline in volumes of Coca-Cola, no matter what happened. It always went up. So the volumes in a boom, volumes in a bust, volumes in all sorts of different things, it always went up. I think he's probably talking about companies that are similar to Coca-Cola. Here's Ollie. Global energy demand is expected to grow between 11 and 18% by 2050, with emerging economies driving 66 to 95% of this expansion. Electricity generation is forecast to increase by 30 to 76% during the same period. So there's a lot of growth occurring on a percentage basis in electricity generation. And breaking here, it says oil and gas prices are likely to surge in the near future due to a significant increase in energy demand globally. And those were the data to back it up. Paulo Macro says, bingo, just because web pages and eyeballs were exploding doesn't mean fiber optic wasn't wildly oversupplied. So your picks and shovels won't save your thesis. A Cisco routers in 2000 is the Nvidia chips of 2025. Chinese just told you yet again, wise man, don't invest in overcapacity. Charlie Munger says, really good investment opportunities aren't going to come along too often and won't last too long. So you've got to be ready to act and have a prepared mind for when that does come. That's Charlie Munger. So if you guys are studying the sectors, you find a good sector, things are pulling back. It could be a recession, it could be fear, it could be anything. You have to be ready to act on it if there's an opportunity that you can jump on. Grady says, spent 2 decades in management consulting, having 3 decades in markets. Decided to combine the two and offer the service because I wanted to, not because I have to. Plus, because the need for guidance has never been greater. So have no need to push anything. I just post what I believe in. The mother of all legit looking probable cup and handles. Third wave, 1, 2 pullback. Third wave coming. Big move in silver. It's all still there, guys. Nothing's changed. The big charts, nothing's changed big chart wise. Basically anything. Nothing's changed. Just let it go. Let it drift higher. And we're going to get these sell-off days every once in a while. Peter Schiff says China may have jumped ahead of us in AI with the launch of DeepSeek, but they can't touch us when it comes to meme coins. We've got that lucrative market cornered. We're number one on the meme coins. Yeah, I made a comment about Bitcoin, and someone reposted that I don't understand crypto or Bitcoin, I should say. I don't understand why crypto is the one that everyone's going into. If you look at the white papers, if you look at the design, that is what I don't understand. Everything that people wanted to adopt in Bitcoin is like undone. What does that mean? People were going to use it as a use to exchange, and have it be where it's out of the system. It's not being tied down by anything. It was basically a representation of freedom. It was just a crappy design. The amount of electricity it takes to do these transactions, the processing fees, that will eventually bring the system down, all of those things. And yeah, I mean that's kind of what I guess the problem is that it's the design of the system. Now, BlackRock and all these places have their fangs in it. So, I look at this and I'm just like, everyone is looking at this as like a huge speculation. And all of the guys that you wanted to not be in Bitcoin they all have their fangs in it right now. I don't see how this is going to end all that well. It's just a weird setup. Morgan says you can build wealth without a high income, but you have no chance of building wealth without a high savings rate. Got to have the high savings rate. Totally agree. Grady says posted on gold and GDX breaking out. Next is gold 3,000, 3,300, and silver 40, 45. First, though, probably a daily cycle decline either from here or from a new gold all-time high that is temporarily a false breakout. Been seeing the same thing all over again. Most seem to be preoccupied with listening to narratives about impending stock market crash, constant talk about metals manipulation, and the United States dollar going to the moon, instead of just looking at what is actually happening. Consuming narratives created to make headlines does not bring much value. The stock market crash is not in the charts as of right now. That is what we know and need to go by. As long as all is good, all is good. And a stock market blow-off is now probably more likely than a crash at this point. An early weekly cycle low looks to be in for general equities. The metals manipulation more or less ended when gold and silver had their huge breakouts a year ago, which posted on here in real time. I do not think that would have happened if they were still in control. Precious metals do not seem to care very much about the US dollar's latest up move, and that is what matters. The recent declines in metals are just very normal, shallow weekly cycle declines for a bull. Posted that USD has topped. If we instead look at what is actually happening right now, the signs are many that also silver have had a weekly cycle low. That means the latest low is a larger low and that it will hold. Said that for the last 11 weeks, that $30 level in triple support there will most probably hold. And it is. Said previous weekly cycle target was 35. We got 35.07. This weekly cycle's target level should be around 42. Since 2019, I've said silver will go to at least $370 in this bull market. And I've been saying for long that 2025 should be a very good year for silver. So Grady thinks that we're going to get a real good year in silver this year coming on up. This is 100%. So if rates settled in the mid sixes and were guaranteed to stay there, I speculate that transactions would hit the 5 million mark in 2025. And that's mortgage rate volatility index. If we stay in the mid sixes, we're going to get a lot of home sales, is his opinion. And I tend to agree with these guys. Pretty smart guys. And that's what we've got for today, guys. So that's what I've got. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. That's all I've got. So we'll catch you next time. This is Finding Value.